Good day, this is Prieur checking in from Cape Town, and here things are really beginning to slow down as people start preparing for the summer holidays. Next week, I'll be exchanging South Africa for the colder climes of New York, and this is a visit I'm really looking forward to. There are a number of reasons. I'll be meeting with colleagues and friends again. I'll also be seeing Bob Seger live at Madison Square Garden, and then I guess just enjoying the beautiful New York Christmas vibe. As far as the business at hand is concerned, and specifically stock markets, the market action has really not been kind to the bulls over the past few days, and this is mostly as a result of no progress being made on the European debt situation, Germany failing to find buyers for 35% of its bond issue, and also the flash PMI data in both Germany and China disappointing investors. I've reported elsewhere on the blog on the Chinese and European economic statistics, so please refer to those posts to get an update on affairs. A statistic just in, or rather a news snippet just in, is from Fitch. They've downgraded the Portuguese sovereign bond rating to a BB+, and I'm inclined to think that there will be many more of these down ratings in the pipeline. The S&P index, that is the red line in the bottom section of this chart, has now seen 6 consecutive days of declines, wiping out almost 10%. And this is a very significant portion of the October gains of 17%. Considering the rest of the world, the MSCI World Index and the MSCI Emerging Markets Index are both down by about 12% since the highs which were registered on October 28th. Needless to say, most stock indices are also below both their 50 and 200-day moving averages. In the midst of the extreme bearish sentiment, I thought it useful to look at the so-called market internals again. These are also referred to as breadth indicators, and they're quite useful. They're used to assess the inner workings of the market's rallies or corrections. In other words, to identify strength or weakness behind the market moves. Now let's consider 2 measures of stock market internals. The first one looks at the number of New York Stock Exchange stocks trading above their respective 50-day moving averages. That is depicted by the green line in the top section of the chart. This number has declined from more than 90% at the end of October to 21% yesterday. We're not quite at the August low of almost 0, but we can safely say that we've entered what will generally be regarded as an oversold area. However, as long as most stocks trade above or rather below the 50 line, the intermediate outlook should be classified as bearish. For the primary uptrend to manifest itself, most of the index constituents need to trade above the key 200-day moving average. Now this number is also down at 21%, having declined from barely more than 50% in October. Fact of the matter is that only 1/5 of the S&P 500 constituents are in uptrends at the moment. The second indicator I'd like to look at is the so-called bullish percent index, the green line in the top section of the chart. This shows the percentage of stocks currently in bullish mode as a result of point and figure buy signals. With this figure at 51%, this indicator is really at a knife's edge. Quite similar to the monthly momentum indicator, the rate of change indicator that I shared with you 2 days ago. Also have a look at the point and figure chart of the Dow Jones Industrial Average that I posted earlier today. This, I think you'll agree, is potentially quite a scary picture. Now, for bulls to have any hope at this juncture, besides improved valuations and oversold conditions, it's important that the October lows should hold. For the S&P 500, the figure is 1099, which is 63 points or about 5% down from its current level. And in the case of the MSCI World Index, the October low is 2.6% down, and for the MSCI Emerging Markets Index, 3.7% lower. So we're getting quite close to very, very crucial levels. And the advice must therefore still be to exercise extreme caution at this juncture. And with that, I'd like to wish my American friends a happy and safe Thanksgiving holiday. I'll be checking in again in a few days' time. Until then, that's the way it looks from Cape Town.